Hi there, welcome to Grain TV. I'm Kevin McNew. It's Monday, May 30th. A three-day weekend did little to stem the tide of selling. We came back this weekend and quickly drove the market down. Beans were off. Beans were off 13 today. Wheat in Chicago off 8, and corn also following lower, giving up 7. Really, the weekend was lighter in terms of rain, and that sort of sent the market down. And in conjunction, you think about the technical situation in soybeans breaking below that 940 late last week. That just kind of led people to get out of any sort of longs that were left. You've got the weather looking to be pretty benign going into June. Yes, it's going to be cooler than normal. Yes, it's going to be wetter than normal as we look ahead into June, but that is not a significant concern at this time of year. So overall, the market was really just selling off on what looks to be pretty favorable growing conditions. We'll talk about here in a second what USDA threw at the trade after the close on crop progress. We'll get to those numbers in a minute. In the meantime, let's take a look at export inspections that came out today. Those numbers were pretty much in line with expectations. Corn and wheat coming in at the high end of expectations. Corn having a solid 1.1 million metric ton week, and wheat also having a good 600,000 metric ton week. Beans were right in the middle there, so none of these numbers were really enough to sort of change the course of trade action today. But after the close, we did get our first hint of what the corn condition is like. And let's take a look at these data. First of all, let's talk about planting. Planting was slightly less than what was expected. Corn plantings are now at 91% versus 92% was what was expected. Soybean plantings also coming in just a hair below expectations at 67% versus 68% expected. But on the crop condition side, these numbers were quite a bit below expectations. Corn, the range was 65 to 70, average of expectations was 68% good to excellent, but USDA came in at the low side at 65%. So that might be enough to get a little bit of a bounce back when we come back for trade tonight. On beans, we don't have a crop condition score yet on that, but in winter wheat and spring wheat, those numbers were also below expectations. Winter wheat falling two points from last week at 52 down to 50 this week, and spring wheat for the first reading of the year well below expectations, coming in at 62% versus 71% expected. So overall, again, I don't know these numbers necessarily, reverse the course, but they may put a floor here, as we see lower than expected numbers on these crop ratings. So that's what we've got. As we look at the trade action on July corn, what we can see is a very range-bound market. For the last 3 months, we have been pretty much stuck between 360 and 380. Today, we're moving closer to the bottom end of that range. I wouldn't expect us to break below that. We do have good export inspections or export sales and inspections going on. There is some concern about new crop deals that are fairly light, but old crop is still moving fairly actively. The other thing, cattle on feed numbers were very strong on Friday. We had very high placements, cattle on feed, so feed demand should be good. Ethanol demand is good. So I think the combination of lower acres, a hint of potentially below normal trend line yields may be enough to sort of give this market in corn a bottom, but right now we're sort of getting close to the bottom end of this range at 360. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you, visit us online at grainhedge.com. Have a great day. We'll talk to you all.